Good day, everybody. This is Mike Zuzolo with your Wednesday, August 14th grain market update. After the 34-month lows in corn from Tuesday's trade, midweek trade for row crops returned to near-term weather for price direction. No, you weren't seeing something that was too odd to believe. The prices were higher on Wednesday. As for the result of that, a bit of short covering and stronger spread action we're seeing because we did return back to the weather trade. Corn was able to retake the 450 level in December futures. August beans able to move back above 1365 as they went into expiration. With the August futures gone, the difference between August and September bean futures right about $1 premium in the August. So we'll have to be watching that August-September spread now that there is a gap in the weekly and the daily charts. August meal also expired with about a $28 a ton premium to the now lead month September futures. And so while the export markets were a bit weaker, interior corn and bean markets in the cash remained strong following the spread trade essentially. Some locations in the central corn belt like Lafayette, Indiana, were back to $1.80 over the September for the corn. That puts you back at $6.50 for cash corn right now. The drier weather for the corn and beans was not able to get fully factored into the price, however, as wheat continued to struggle on Wednesday's trade. European markets were the leader to the downside for a shift, leading the U.S. market, and the German feed wheat in particular closed down over 2% as Germany's forecast for wheat production was increased by some projections. A lower Russian crop estimate was also released by Russia's government, but I think that was ignored for the most part by the trade as a result of the Egyptians coming out and saying that they were going to be seeing a state of emergency coming into their country because of the heightened tensions between the Muslim Brotherhood and the army. Now, this is maybe a little bit of a stretch, but historically, whenever Egypt and the Middle East start to heat up, it's usually beneficial for crude oil, but it's not so good for wheat because it tends to slow down the actual deliveries and hurt some of the trade potential for the wheat market. So uncertainty in the Middle East, I think, did play a role in Wednesday's wheat trade. That's it for today. Have a great day. For more information, go to globalanalytics.biz. I'm Mike Zuzolo. Please remember, there is substantial risk of loss in trading futures and options. The impact of cycles or current events on prices may be already reflected in futures.